Good evening, folks. This is Dan Bird with the Daily Scan for 12/16, Monday, 16th of December. Tonight's topic will be Max Payne. I've talked about this before, but I've never done it on the YouTube. So we're going to talk about Max Payne. I'll try to explain what that is a little bit, but you can see right here the definition, the options strike price with the most open contracts, and thus the price that causes financial losses for the largest number of option holders at expiration. Expiration is this Friday. So, and it's the end of the year, end of the quarter as well. So usually just a rule of thumb is if the market had been going up previously, Max Payne implies that a market may come down because market makers won't have to pay out all of that premium if the prices come down from where the option strike prices were, if they've been elevated using calls. So lots of people buying calls right now because the market's been going up. So if the market falls, then market makers won't have to pay out that premium. That's kind of the shorthand understanding of what Max Payne is. I am not a financial advisor. This is for educational purposes only. You have to understand your own trading style. And if you do decide to engage with a financial advisor, you can go to this website to check them out. So let's jump into it. I'm going to do this pretty quickly tonight. So the market bias went down slightly today, but most of the major indexes still went up, and the aggressive sectors in particular went up. So the S&P, you can see right there, it's hasn't broken out to a new high, but went up a little bit. I think everything's waiting for Wednesday for the Fed meeting and likely for another rate cut. NASDAQ actually did pretty well today, so definitely hitting new highs, had a huge up day right there. Big cap tech stocks is what's driving that. The Dow had been the laggard, and it continued to go down today. So the Dow continues to fall. Bitcoin broke out and hit 106. The high today was actually 107.8, and then pull back a little bit right at the end. It has actually a spinning top doji. So that means it opened at 104. It went up to 107, went to a low of 103, and then closed at 105. So went up, went down, and closed in the middle. That's indecision. That might imply a short-term reversal. We'll see. But right now it's sitting there right above support. So Bitcoin is looking pretty good. All right. Let's talk about Max Payne first, and then I'll talk about a couple of other things. So what is Max Payne? First of all, I want to give a shout out to Earnings Beats and Tom Bowley. He's the one that comes up with the report. I'm not going to go through everything in the report or really explain as well as he does what Max Payne really is and how it's calculated. It's essentially the balance between calls and puts, so bears and bulls. And like I said, if there's more calls, then that balance is lower. If there are more puts, if the market had been going down, then that balance is higher. And right now, obviously, we've had more calls. So you should expect to see a lot of negative numbers for Max Payne. But I would recommend, if you want to understand this better, Tom does a great job. His website has some really, really powerful and valuable information out here that I use quite a bit. He's doing a session tomorrow at 5 p.m. If you sign up for his free trial, it's on his, I think it's on his front page, then I think you would have access to this Max Payne presentation. So highly recommend it. It's a great website and lots of really valuable information there. All right, so let's take a look at Max Payne. And I'll actually show you the report for this month. This is Tom's report. I'm not going to go into it in any detail, but he basically will publish what that balance is. And you can see the SPY and the Qs right there. The balance is down about 10%. And these are all of the other stocks. So where those stocks, obviously the ones that have been going up the most, will probably have the Max Payne point would be much lower, all the way down to the ones that have actually gone down, and their Max Payne point then would be higher. down to the bottom. So it's an interesting way of looking at things. I'm just going to go through a couple real quickly and show you where the max pain points are. If you want more information, like I said, I recommend tuning into his session tomorrow. So first of all, here's the SPY. The vertical line is last month's options expiration. So that was November 25th, last month. Last month's max pain is the blue line across here. And what you'll notice is that most of these, pretty much all of these, don't come all the way down to max pain. And that's really not what it's for. In most cases, they will not go all the way down to wherever that max pain point is. In other words, the balance between calls and puts. However, it will imply a direction sometimes. And it didn't really do much for the SPY last month, just went sideways after max pain. You can actually see before that Friday, it was actually going up. So the bottom one, the red line, is this month's max pain. The blue dash line is last month's max pain. So just to give you a sense for what this looks like. And I want to highlight that the whole point of this is not to tell you what the price is going to be. Nobody knows that. It just sometimes gives direction of which direction things are going to go. So last month was right here. It went down for the first couple of days of the following week. This is the Friday. And then it continued higher. So max pain was with this blue line. This month's max pain is down here at the red line for the NASDAQ. Here's NVIDIA. Now, NVIDIA did go down right after the options expiration Friday, and then it went up. And now it's been going down. It's been going lower, but max pain is way down here. It's actually lower than it was last month. So that's interesting. Here's Amazon. Amazon max pain is higher than it was last month. And you can see after options expiration, it had no effect whatsoever. Amazon rather just continued to go higher. Broadcom, right here, Broadcom had a couple of days down, and this max pain report, again, just gives you general direction, but it usually just lasts for the first couple of days into the following week. And sometimes it could last longer, but usually it's just the first few days. Now we're going to have the Fed report on Wednesday of this week. So we'll see what effect that has. If you look at the week prior to the options expiration, it was just going sideways, then it went down, and then it took off. So max pain this time is lower than last month. Here's Apple. Max pain is roughly right about the same place. Last month, it had no effect whatsoever. Even going into options expiration, just continued to go higher. Microsoft, same kind of thing. Before options expiration, actually, it was going lower the week before, and then right after options, it took off. Max pain is right about the same place as it was last month. Meta, max pain lower than last month, and last month didn't have any effect, just continued higher. Netflix max pain is much higher than it was last month, and you can see last month that the day of options expiration had a big sell-off, and it took about a week for it to get back up to its previous highs. So there was a little bit of an indication there with Netflix. Google, seen Google before options expiration, big downtrend. Max pain hit, went sideways the next week, and then took off after that. This month, max pain is a little bit higher than it was last month. And Tesla, I think it's the last one. Max pain is higher than last month. And last month, about 2 weeks before options expiration, Tesla came down, went sideways into the expiration, sold off the day of options expiration, stayed down there for the next week, and then took off. So this is kind of what max pain implies, that the day of options expiration might be a big sell-off, then it might continue a little bit into the next week, and then after that, max pain really isn't much of a factor. So just wanted to give you guys a heads up on max pain, and mostly that options expiration is always a volatile week. This week is both it's triple witching basically. So it's the end of the quarter, end of the month. So there'll be lots of volatility for options expiration. All right, the next thing I want to talk about is a couple of stocks that a subscriber asked about. I have DTM, which is a pipeline stock, on the paper trade worksheet. And the question was, what about these other ones that are also pipeline stocks? Can you talk about those? So the first thing I will do is take a look at the list that I use for the daily scan. And I've gone through this before, and you can go back to the very first video and I explain how the daily scan works. But it's the top 10. It's the stocks that have been in the top 10 consistently over and over again. Every week I update the top 10 list down here. There's 3 of them. I show you the ones that have dropped out. That doesn't mean they're bad stocks. It just means they might be number 11 or 12. But those are the ones that have been in the top 10 and plus the top 10 for large, mid, and small cap stocks. And I put them all together in a CSV file. So this is a really solid group of stocks to run scans against. And that's what I use for the scan. So first off, I'm going to look at the whole list right here and see if those stocks are in it. So we're talking about pipelines. So I'm going to sort on industry group, go down to pipelines, and down here at the bottom, there's only 2, DTM, which is one that hit the daily scan, and TGS, which is looks like a South American, maybe a South American pipeline company. Those are the only 2 pipeline companies on the list. So the ones that I'm going to show you here in a second aren't even on the list. So there's no way they can make the scan if they're not on the list to begin with. So that's the first thing. So now let's take a look at them. First is EPD, Enterprise Products Partners. So if we look at a daily, we'll just look at it side by side. The one on the left is DTM. The one on the right is Enterprise Products. Just take a look at the charts and you can see for yourself which one looks stronger. Now, that doesn't mean DTM might collapse here. We have our stop right down here at this low. So we got into it when I went above the 21-day moving average and put the stop right below the low, the previous low right there. So if it does collapse and follows Enterprise Products, then we'll be out. But right now it looks better than EPD. The next one was ET. Let's see what these look like. So these actually, ET actually looks pretty good. It's coming down and just touching its 21-day. It's outperforming its peers, the blue panel down below. And much like the other 2, the momentum is rolling over. So we'll see this one actually is a little below the previous low. So this one, if we had got into it, probably would have been stopped out. But again, it's not on the list, so it wouldn't even make the scan. The next one is ENB. And here's these 2. So DTM on the left, ENB definitely looks like the worst of the 3 so far. It's pulled all the way back down to the 50-day moving average. And it is underperforming its peers. So this looks like the worst of the group. I want to go look at EPD again and see how it's doing versus its peers. It's underperforming its peers as well. So this is one of the criteria to make that top 10 list, by the way. It needs to be outperforming its peers, and Enterprise Products is not. It's below the 0 line, and it's actually sitting right on its own moving average, but it's below 0, which means it's underperforming its peer group. So the other one was an ETF that encapsulates all of these, AMLP, and I'm just curious to see what this looks like. So again, dropping today, even though DTM is holding up. So this one's dropping below the 21. It can't compare with the peer group because it's an ETF. So all of the peers are already in there. So you can see DTM is definitely looks like the best house in the neighborhood. But because the rest of them are falling, this one might end up following along. So we might end up getting stopped out of this before it actually starts moving up. So that's it for those. Hope that was helpful to the person that asked me about it. Last thing I want to show you is first I'll go to the scan itself and show you the scan that I found quite a few on today. I think it was this one. Yeah, I think it was this one. So this scan right here is the downtrend reversal scan. There's a number of stocks that I added to the list. So Core Scientific, Honest Company, I almost put HIMS in. Honest Company was one. And then I get the rest from another list. This one here, I think. Also a different kind of downtrend reversal. So XL is one, is on this list. And NN, NextNav, is on the list. So let's take a look at those. And RDW, that's the other one right down here, red wire. One of the criteria that I'm using now, and I have to do this manually, but before I add it to the list, I am checking to see if it is in a squeeze, John Carter squeeze that I've talked about before. And I might actually do that for the Technical Tuesday tomorrow, give a deeper explanation of his squeeze. So if I show you the list right here, there you can see Google and DTM are still on there. These are the ones that have been added. 2 of them did not execute. The other ones I had limit orders in. 3 of them did execute. So you can see the price that we're in at and where the stop price is, but we'll look at each one of these. And one thing that I've added here is the number of days that it's in a squeeze. So you can see the Honest Company was only in a squeeze for 1 day, and anything that's less than 5, I'm color coding in yellow. Anything that's 5 or more is going to be green. John Carter looks for 5. It doesn't mean he doesn't jump in on just 1 or 2, but he likes to see 5. So let's look at the Honest Company. This is Jessica Alba's company. So there's where it is. Big pull, nice run up, pull back to the 21, just below the 21. Now it's above the 21, and momentum is starting to curve up now. So those are all good signs. So that looks pretty good. We'll see if it continues. Next one was, I'll do the ones that are in the list first. This one here was looking interesting, pretty interesting anyway. This is NextNav. It's in the internet space, communication services internet. It had a really nice run up, and then it went sideways. You can see why it was in a squeeze and why it was in a squeeze for quite a long time. And then it broke out today. It's breaking out of the sideways channel. So we get in and huge volume today as well. Let me turn this on right there. Huge volume on this breakout too. So that's good news. It's in the same space as Google and Netflix. Look at the accumulation distribution. Looks really good. So this one's really interesting. All right, the next one, RDW. This is in the aerospace, industrial aerospace group. Huge volume today as well. Of course, you always get big volume on a lot of times you get it on the week of options expiration, but definitely on Friday when options actually expire, you have to pay attention to the volume because a lot of times it's much higher than normal. But look at the volume just in the last month on this. So this is a pretty interesting stock. It's been making higher highs, higher lows. Right there is the dotted line is where the stop is, right at 12. And the accumulation distribution had been coming down, but that's because it was selling off. But now everything is starting to turn back up again. It's still above 0, so that's positive. And it had a big candle today on huge volume. So that one looks pretty good. And if we go back to the list again, you can see RDW had 2 days of a squeeze. Honest Company only had 1 day, and NN had 6 days. The other 2 that have not executed yet, but they might be pretty close and might happen tomorrow. They have much longer squeezes. So let's look at the first one here, Core Z. So that's where the stop would be. I think the price was $16.50 for the limit order. So it ended at $16.56. So if it comes down 6 cents, then it will execute tomorrow. Again, higher highs, higher lows, went sideways. So that's why it had such a long squeeze. Pulled back below the 21 and then came up above the 21 again with big volume today. So this one actually looks pretty interesting as well. And then finally, We'll look at Excel. 34.50 is the no, it's a stop. $36 is the proposed entry on this one. So right now it's at 36.07. So that if that comes down 7 cents, same kind of thing, long sideways movement. That's why it had that long squeeze, big volume today. All of the momentum are starting to curve up. Accumulation distribution, it looks really good right now. So this one looks good too. We'll see if it executes tomorrow. Just needs to come down 7 cents, and I'll let you know tomorrow what that looks like. So that's the status right now of everything on the list. I showed you, you can take a picture of that, of the whole list if you want to, and look at some of the other ones. There were other really interesting looking ones on there actually, but I am now making sure that there's at least a squeeze of some kind before I add them to the list. So I showed you what that looked like when I do the squeeze tomorrow for Technical Tuesday. I might look at some of these in the squeeze itself. So I'll show you what I mean by these days over here. All right, so that's it for tonight. Thanks for watching, and happy trading. Be careful this week. The Fed meeting on Wednesday, I think they're going to cut. It's probably going to help the market. Probably will help small cap stocks. And we may have no effect whatsoever for options expiration this week based on the catalysts that are out there. So thanks a lot, everyone. Please like and subscribe to the channels so that I can keep this going and we can continue to do this if you think it's useful. And thanks for watching. Take care.